All right, so I was doing a little bit of research recently, and I came across a stock that I really, really like, and I'm going to get into it here. This is BCC, Boise Cascade Company. Again, $5 billion company, 11.75% free cash flow yield, which is one of the many things I really like about it. It does have a small dividend, which I'll get into later. Again, if we look at the type of company it is, again, Boise Cascade Company engages in the manufacture and distribution of engineered wood products and plywood. Again, headquartered in Boise, employs 7,250 people. Again, so they went IPO about 11 years ago and back in the start of 2013. So again, let's get right into it here. Again, so there's a handful of things to go over here. Analysts, again, a little bit bearish here. Dividends, again, I'll get into later. Financial health, this company has a very, 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 very good balance sheet. That's one of the many things I really like. The growth for this coming year is a little bit concerning for sure. Profitability, I think they're solid for the kind of company they are. Management does a very, very good job. I mean, return on invested capital 32%, return on equity 21%. Again, extremely, extremely good. Those are very good numbers. Again, it is a little bit expensive right now. That's the one caveat I would have. And because I say that, I'm not actually buying it right now. I'm waiting for a pullback. And again, people are probably wondering, okay, well, how much do you want it to pull back? I would want it to pull back to at least the 50-day moving average. The 50-day moving average is currently at about $112, $113. So again, if it pulls back there, I would slowly start to dollar cost average. Now again, this is a smaller cap, borderline mid cap, depending on your definition. So again, I'm not looking to take a massive position here. This is one of the companies that, again, I would take maybe a 2, 3, maybe 4% position and hope for the best, because this is a company I could see you easily 10xing your money on if you're willing to hold it for 20 or 30 years. And again, I will show you why that is, right? So if we get into the financials here, again, like I mentioned, again, very good balance sheet. Assets far outweigh liabilities. If we look at the profitability numbers here, again, they are becoming very profitable, at least compared to their past, right? I mean, just going back 5 years, again, they've basically doubled, almost tripled their free cash flow margin, right? Operating cash flow margin, they've doubled that, right? Just over 4 years. So that's very impressive there. If we look at the cash flow, right? If we look at the cash flow, again, free cash flow 927 as opposed to, again, 162 in 2019, right? I mean, they weren't even over 50 until 2016, right? So again, they're growing very, very quickly. But again, I think they've gotten a little ahead of themselves. That's something that I think is more than likely the case here. They've definitely gotten ahead of themselves, which is why I want a pullback before I take a position. So again, another couple things to mention here that are very good. Again, they haven't taken on any new debt since 2016, right? No new debt, which is very good. They haven't also issued a share since 2017, right? So no new shares in 7 years, 6 years, right? That's very good to see, right? Because again, companies that are perpetually issuing shares and taking on debt, that's a massive red flag. So again, that's very good to see. As far as the dividend here goes, again, they're going at 17% per year, which is phenomenal. And again, another thing that's very, very impressive here is the payout ratio is only about just over 5%. So they're going to be able to grow this dividend very, very nicely over the long run here, which is why I think that you could 10x your money on this company if you're patient, right? And not only that, they pay special dividends, it looks like once or twice a year, which the last one was $5, which is insane. So again, that's just another cherry on top here. Again, they've also easily outperformed the S&P. If you go back 10 years, they've actually doubled the S&P. If we go back 5 years, let's go back 5 years here. They've actually more than doubled the S&P. So in fact, the vast majority of their gains have came within the last 5 years, which does make sense when you consider that, again, their profitability numbers really started to pick up in like 2018, 2019. So the last thing, let's get into the free form here. Let's look at the valuation. Let's look at the levels of growth here. So again, over the long run here, again, they've grown free cash flow per share at 48% per year going back 10 years, and 28% as far as operating cash flow goes. Let's go back 5 years just out of curiosity here. Right, so we go back 5 years, they're actually growing even faster, right? Growing even faster. And again, on top of that, the rate that people are paying is actually barely even growing, right? Barely even growing, which is something that I really like to see. So again, if we want to look at a valuation, again, the latest price to operating cash flow, which appears to be a little bit more steady, it definitely is more of a steady metric as far as this company goes. Again, the average is about 5.1. It's currently at 6.7. The highest has been 9. The lowest has been 2.3. So again, it definitely is a little bit overvalued where it's at here. That's something that I think is very fair. Again, but I mean, just recently, I mean, back in October, it was right around there, right? So again, it can easily come down there. And I mean, back in the earlier this year, it was very low. It was about as low as it's ever been. So again, I think that it's inevitable you see a pullback in most stocks, and when that happens, that's when I'll be pulling the trigger on this company. So again, I'll be watching that very closely. Again, given there definitely is a decent amount of risk when it comes to this kind of company, but again, the risk reward here I think is very good, and that's why I'm interested. So anyway, if you liked the video, hit that like and subscribe, comment, all that good stuff, and stay tuned for more.